Today I'm looking at another strategy, and this strategy is again from Tradepro, and it uses the SSL channel, volume, and MACD. So I've got a chart open here, and let's start adding the indicators. And the first indicator I've put on here is the SSL channel. This is an indicator that I used recently when I was showing how to convert a simple TradingView indicator to Metatrader, and it just happened to be the SSL channel, so that worked out well. And the SSL channel has two lines. There's an upper and a lower line. Let me just show the data window here. So on the data window, they're listed here as the leading and trailing lines. That's the way I named them. So the leading line being above the trailing line means that there is an uptrend signaled by this indicator, and the leading line being below the trailing line means there's a downtrend. So where I have the cursor at the moment, the leading is below the trailing. If I move here to where the yellow line is above the white line, then the leading number is above the trailing number. And the strategy from Tradepro says that you will trade when these lines cross. So you'll take a buy trade when the lines cross above and a sell trade when the leading crosses below the trailing. But those crosses happen quite often, and often they're fake crosses. So there are filters to be added. And the first filter is volume. Now here I am using tick volumes, mainly because the actual volume is 0. If I just scroll around and show the data window again, you can see that volume is always 0. But there is a tick volume. So this broker isn't recording a volume, and I've chosen to use the tick volume. And I'll also mention here that volumes in Metatrader are the volume as known by your broker. There is no central exchange for foreign exchange. So these volumes are only the volume that has gone through the broker. Now, that shouldn't be a problem because we're looking at relative volumes. And as long as you're using a broker that's reasonably sized, then these relative volumes are going to be close to the relative volumes that everyone has. Where if you're using a very small broker, you might find that they have different relative volumes. So what we're looking at here is the volumes, and I'm using the tick volume, which is really just the count of the ticks that have happened inside each bar. And then to use that as a filter, Tradepro applies a 20-period moving average to the volume. Now I can't easily add a 20-period moving average on the volume to the chart, so I'm just going to leave that for now, but it will show up when we run the tests. And the final indicator then is the MACD. And the filter for the MACD is that we only buy when both the MACD and the signal are above 0, and only sell when both the MACD and the signal are below 0. So to summarize that, we take trades when the SSL channel crosses, but only if the volume is above the 20-period moving average of the volume. And I'm sorry, I can't show the 20-period moving average line here at the moment. And we only buy if the MACD and the MACD signal line are above 0, and only sell if the MACD and the MACD signal are below 0. And the final indicator that's used is the ATR, and the ATR is used to set the stop loss. The default strategy is to set the stop loss at 2 times the ATR, then set a take profit at a 1-to-1 ratio with the stop loss. At that take profit point, close half the trade, move the remainder of the trade to break even, and let that remainder of the trade run until there is an opposite cross in the SSL channel. The Tradepro test was over 100 trades, and the result that he showed was only in terms of number of wins and number of losses, and that's mainly because of the split on the close of the trade, closing half the trade at that take profit. I will be running this on MT5 on a 1-hour chart. I'll be running for a 12-month period from the 1st of January 22 to the 1st of January 23. So I'm using the indicators, the SSL channel at the default settings. I'm using the tick volume and a 20-period moving average on that tick volume, and only trading if the volume is above that 20-period moving average on the volume. I'm using a MACD at the default settings for the MACD, and only buying if the MACD and the signal are above 0. Only selling if the MACD and signal are below 0. I'm setting the stop loss at 2 times the ATR. I'm taking profit on half of the trade at that 2 times ATR, or the 1-to-1 ratio with the stop loss. And at that same point, I'm moving the stop loss to break even for the remainder of the trade, and letting the remainder of the trade run until the next time there is a cross of the SSL channel. I'm going to be running this on 6 currency pairs: Euro USD, Pound Dollar, Aussie Dollar, Euro Aussie, Pound Aussie, and Euro Pound. And I'm trading all of these for a lot size of 1. which means that at that take profit point, I'll be closing half a lot and then letting the remaining half a lot run to conclusion. So now let's go on to the chart, and I will run these and then show the results. So here are the results for that 12-month run, and generally the profits are not good. The win-loss ratio is still positive in all cases. I've always got more wins than losses, but the actual value of the profit is often negative. The one difference is the pound Aussie profit. And I would say that the reason that I'm having a loss, even though I have more wins than losses, if you think about that strategy of taking profit on half the trade and moving the stop loss to break even, if I hit that take profit point, yes, I've made a half profit, but if the price then reverses and comes back to the opening price, I will have only made half a profit on that entire trade. Where if when I open the trade, it simply moves to the stop loss, I will have had a loss on the entire trade of 1. So the losses can be larger than the wins, and therefore I don't think it's valid to simply compare the number of wins and number of losses. You have to look at the actual size of the wins and losses. The number of trades are reasonably consistent across all of these currency pairs. The reason pound Aussie traded well, I don't know. Market conditions were good for that particular pair for this strategy through that year. Now I'm going to post all of these results on our website, the full result that has come from the backtester, so you can see all of the trades that were taken and all of the charts produced from that, and there'll be a link in the description where you can find those charts. But now, taking those results, I just wanted to make a few changes to see if I can actually switch the results around and make something different happen. And so I'm going to be making some changes to the trading rules for Euro USD. Now I'm just saying that these are things that I'm testing out. I'm not recommending these as particular changes. You may want to make your own changes, but these are some of the things I tried. And I modified the expert advisor so that I could turn some things on and off. And there are obviously a lot of combinations of things that can be tried. But the first thing I did was to add an RSI filter. Now remember, there is already a filter based on volume. But this is a trending strategy, and low volume doesn't necessarily mean not trending, and high volume doesn't necessarily mean that it is trending. So I have added the RSI filter, and the way I set the RSI filter was to only buy if the RSI number is above 60 and only sell if the number is below 40. When I added the RSI filter, it reduced the total number of trades, increased the win-loss ratio a little, but it also moved the total into profit. So that had a positive impact on Euro USD for this particular year with all the other settings as they were. And the next thing I looked at was the partial close. And I made further modifications so that I could set to either just close the entire trade on the take profit, or I could let the trade run, but I was still moving the stop loss to break even when the price reached that take profit point. So basically I was doing the same as the second half of the trade, but without closing the first half. And I found that just closing on take profit reduced the total number of trades down to 70 from 176, but it also reduced my losses from that 3,088 initially to a 139 loss. And this is still with the RSI filter in place. And I would say that the reason that this has given me a lower result than just the RSI filter is simply the number of trades that have been taken. And so then, just to do something a little bit interesting, I looked at this average consecutive wins number, which is 3. Now 3 is a little bit low, but I decided I could do something with that and implement a reverse martingale. So the next thing I did was apply reverse martingale to this with a cutoff point of 3. And when I applied that, so I'm still using the RSI filter, I'm closing on take profit because I can't really do the reverse martingale when I've got the partial close, and cutting off the reverse martingale at 3 trades, I changed to a profit of 2004.53. Now I'm not recommending reverse martingale, but in this case it actually made a difference. So I just thought those kind of adjustments might be interesting to you in terms of reviewing this strategy. Overall, I didn't necessarily disagree with the results that Tradepro had, but as I said, the Tradepro results focused on number of wins and losses, where I've actually looked at the profit and loss because I was able to run this through a mechanical trading system and actually calculate the profit and loss. And I found it not to be a terribly profitable system. If you found this useful, click the like button, and if you want to see more of our videos, click subscribe and click the bell icon to be notified when we release more videos. Until next time, thank you for watching.